now that all of our entries have been recorded, let's update this. This is actually a partial trial balance after adjusting entries. And it's partial because only some accounts are shown here. This is not everything that the company has. We're not going to include cash. We don't know what the beginning cash balance was. So our debits and credits are not going to, the totals are not going to equal because we don't have all accounts here. But let's just make sure that after adjusting entries are booked, we're comfortable with what is the impact, what is the net balance based on the information that we have here. So our balance in accounts receivable, remember we had recorded accounts receivable in transaction 9, we recorded $4,500. That's the only thing that took place. So our balance in accounts receivable is still $4,500, and we separately report the allowance for doubtful accounts of $1,600, and remember that that has a credit balance. So we give the investors all of the information. Our customers owe us $4,500, but we expect that we're not going to collect $1,600. Prepaid insurance. We purchased prepaid insurance up in transaction 3, and then we used 1 month's worth of it. So we had an ending balance in prepaid insurance of $3,300. How about supplies? What's our ending balance in supplies? The beginning of the period, we purchased 5,000, and at the end of the period, we did an inventory count and found that we had an ending balance of 3,500 of physical supplies on hand. So if that's what we have on hand, that's what we need to show in the books. We booked the journal entry here that would force our supplies balance to be 3,500. And that 3,500 is what we're going to report on the balance sheet, or for now in our adjusted trial balance. Remember, equipment works somewhat similar to accounts receivable. We took the value down of equipment for the equipment that had been used up during the period, but we did that in a separate contra asset account. This equipment account is going to stay at the cost of the equipment, which was $20,000 here in transaction 5. And we're also going to give the investors the information that accumulated depreciation for the period was $600, so that they can see the net cost of the equipment and how much of the equipment we've used up. Remember, contra assets have credit balances. How about unearned revenue? We recorded unearned revenue in transaction 7 when we received $18,000 of cash from the customer, but then throughout the month we earned 1/3 of that. So what's our balance in unearned revenue at the end of October? It's the $12,000 related to the services owed for the next 2 months. Salaries and wages payable, the ending balance is just our one entry that we recorded for the 3 days that employees worked and have not been paid. Interest payable, we recorded one entry for interest, and that was in transaction 10. Interest payable is 100. Service revenue, we recorded 2 transactions to service revenue. One of them is transaction 8, where we earned some of our previously unearned revenue for $6,000. And then in transaction 9, we increased service revenue by $4,500. So we're gonna net these two for service revenue, the $6,000 plus the $4,500. Our total service revenue is $10,500. Depreciation expense, we know, was the $600 that we recorded earlier. The other side of that entry was our accumulated depreciation. Supplies expense was the $1,500 of the supplies that were used. We want this $1,500. Interest expense was the $100 that we accrued based on our loan at a 6% interest rate for 1 month. Insurance expense was the usage of prepaid insurance. Transaction 4, we used up $300 worth, or 1 month of our insurance policy. Bad debts expense We recorded one entry to bad debts expense for $1,600. That was our estimate for this period of the receivables we think we will not be able to collect. And salaries and wages expense, again, was $3,000, the same amount as our payable this period. I hope you enjoyed this video on adjusting entries.